Listen, I'm passionate about this, but I would not take this into a moral place. I don't want to go there. I just want to go like, literally, what is the right way to calculate something? Does this thing have a cost? Then let's put it in. So here's this example of this property. Again, a real life property that I think it's very appealing when you look at the evaluation, the way that this provider presents it, right? It's a purchase price of $130,000. How cool would it be to have a $130,000 property in Jacksonville? This one happens to be in Oklahoma City. Then you look and you're just like, oh, cash flow. Okay, cool. There's $95 a month in cash flow. Wow. Listen, that's close to 100. That's really good. That's more than the property in Jacksonville is, right? Jacksonville's cash flow is like $25, $50 a month, something to be positive, but nothing's going to change your life. Well, so you're like $100 a month. You're like, okay, cool. And then you look at your return on investment. You're like, oh man, 29% returns. Man, that sounds awesome. I could turn my money over every 3 years. Like, oh, cool. Listen, I bet even if they were just a little bit aggressive in some places, maybe it's really a 20% return. Maybe that's what it is. And you start to convince yourself of these things. But au contraire, we're going to take a look at what the real numbers actually dictate when you capitalize on all of the costs. So I broke down their way of estimating on their property, and then I ran it through Jwb'S property valuation to calculate what we would estimate that same property to show. And I listed here all of the things that they do not include. And there's actually one thing that we include that they don't. So I wanted to show that too. But does this provider include closing costs? No, we do. What is their expected interest rate? Their expected interest rate's 5.25%. Still way aggressive. Jwb'S is conservative, but I know that we can hit this, and we're at 6%. What do they expect for their down payment percentage? Theirs is way more aggressive, 25% down with a lower interest rate. Hard to do. I doubt that they're actually able to do that. For Jwb'S property valuations, we expect 30%. So again, conservative is what we're looking at when expecting interest rates.
So basically, you're going through this thing and you are showing how Jwb adds the right amount of costs into all these different things. Some completely omit it, some underestimate the cost of it. The Jwb property eval is actually putting all these things in there. And therefore, what I'm hearing from what you're saying is like, people can fall in love with this other number, which then pegs their thinking to like, this is what the market should be bringing me and whatnot if you're comparing it one-to-one with a Jwb property eval. But I think the more important thing out there is if this is happening at scale. Let's say I'm not somebody that's comparing a property to versus somebody that's showing this to me in Memphis or a Jwb property. I think what's landing on me is that if this stuff is happening at scale, then the average person that's like, what kind of experience should I expect from a rental property? They're just not getting good advice overall when all this stuff is happening so much everywhere.
Exactly. We are the weird ones at Jwb. Their way is the way that every other provider presents their return on investment. We're the weird ones. We know that. We're cool with that. It helps me know that I can actually perform to hit these numbers because I have clients 10 years, 20 years down the road that still look at those same numbers I told them day one when they bought it. And they're like, hey, Greg, how are we doing? No other provider does that. And yeah, so I think that the vast majority of people are uninformed and flat out duped when it comes to property evaluations. There's just no other way to say it.
So at the end of the day, if I was to ask you a question, how do I catch a trickster on ROI world? You ask them, are closing costs included? Is my expected interest rate correct? Is my expected down payment percentage included? Does it include tax savings in your IRR? Expected appreciation percent per year? Is it historically accurate, or is this just what's been going on in the last couple of days? Are we including maintenance cost each year as opposed to just turnover years? What is the maintenance cost percentage, and making sure that that's accurate, and it should be somewhere around like a 7.5%. Are selling, holding, and closing costs included when you are exiting the property, and that's the IRR calculation that they're giving you? Are you counting appreciation in IRR every year as opposed to when you actually sell the property? And is expected vacancy cost percentage when they actually put it in and whatnot, right? That's basically the list.
Absolutely. So I took all of that good stuff and I took their way of presenting this same property in Oklahoma City. Their way told their investor who will purchase this that they're going to receive $95 a month in positive cash flow. Jwb's estimate would be negative $105 a month, just using their numbers, but actually reflecting all of the costs that come along. Their return on investment that they would advertise and are advertising right now is 29%. JWB's estimate, again, accounting for all the costs and actually using numbers based on their market, 6%. That's how you take a 29% estimate for return on investment and turn that into a 6%. That's exactly what is happening to a lot of investors out there. And that's why I'm so passionate about this. People need to know right off the bat that these 30%, 20%, 15% expected returns on investment are just flat out not accurate.
Yeah. And again, I don't think that this is as relevant to the idea that somebody's going to go out there and look at an Oklahoma City property and then look at a JWB property and be like, oh, these guys are way better. Because if you're doing that, you're probably going to look into JWB and understand you're better. But I think what's landing on me is that this is why people talk trash about rental properties, is because their experience is that they've bought it from someone that promised them 29% and they ended up getting 6%. Somebody that promised them $95 per month and they're getting negative $105 per month. I mean, that to me is the really impactfulness of this call.
100%, man. And why is it that way? It's because you're not working with a vertically integrated company that needs to be held accountable for the returns that they tell you that you're going to get. There's no way when you go and buy this property with this other provider and expect 29% returns after 10 years, that you're going to be able to look back after 10 years and actually hit that number. It's just flat out not possible. And, that can really have negative consequences. And so, I hope that's the big takeaway here is let's have an objective way. Let's not have a double standard. Let's not have a double standard within rental property investing. Let's not have a double standard outside of rental property investing with other asset classes as well. But, hopefully now everybody has more of the tools to ask the questions, and you guys can use the same JWB property evaluation. All I did literally took the JWB property evaluation, plugged in their estimate for rents, their price, their taxes, their insurance. You guys can do the same thing and you'll come to the same conclusion.
Love it. Love it.